welcome to Thought Leadership Thursday for this evening. We haven't had one of these for a while. And I think a lot of people have been away with all the holidays. I think, especially in South Africa, people escape the cold. And overseas, people go to resorts. So, as you know, before we get started, Cashbox is authorized and regulated in both Mauritius and in South Africa. And our full disclosure information is available on our website. It is always important for you to do your own research. So while we can give you some insights, it is important for you to back that up with your own research so that you can make your own informed decisions. So this evening's topic, ignore the noise. So for someone trying to make good decisions about their money, the noise, or the proverbial noise, can make it feel very real, very loud, and very confusing. And with that, I'll hand over to Andrew.
Thanks, Jill. How's it, everybody? For those joining late, I'm down in Cape Town, which is not sunny like in Scotland, but it's rainy and cold. So I was asked this question around about a few weeks ago by a client who says to me, hold on, stop the show, because I'd been blabbing off to him. And he said, you keep talking about this noise. And he said, I hear it in the financial press and what have you. What is this noise? And so I explained to him as best as I could. And I actually sat back afterwards and I contemplated, and I think financial services and perhaps even many of us in our own space have heard this expression. You know, there's a lot of noise out there. We certainly, I think, financial services often take it for granted that people understand what is the noise, and how does one differentiate the noise, and how does one give importance to that noise, etc., etc. So the Thought Leadership Thursdays sort of segment of Cashbox's life is that it's a compartmentalized section of education. It's trying to just make people informed and aware of what needs to be considered. You know, Joel mentioned that one has to do one's research and all the rest of it. So that's actually a very important narrative. You know, when one does research, it's easy to trot it off and say one needs to do research and boom, boom, boom before one ticks the box. But in that research, you're impacted by this noise. So we thought it'd be worthwhile, to have a more structured approach as opposed to sending out a blog or something like that. So this is it tonight. It's shorter than our webinars, so it's 30 to 40 minutes, and there's lots of time for questions if you guys want to have questions. But I think that slide says it all. It gets very real, very loud, and very confusing because we as humans are hardwired to react to noise, and our lives have changed incredibly and exponentially since COVID. So the digital world, in terms of social media, in terms of the information depth, in terms of AI that's come along now, it impacts on us, and it does make us think. Sometimes for the right reasons, the wrong reasons, but at least it makes us think. And I think the direction of that thinking is what needs to be channeled. So we're going to give hopefully some pointers tonight in terms of identifying what this noise is, how to deal with it, and try and give it a rank on the sort of pecking order of how we ultimately get to make decisions which are going to be financial decisions which are going to affect our lives. So let's go into a little bit of a fun slide next. I asked Bill to prepare this for me, and she came up with, I think AI, artificial intelligence, came up with this.
Yep.
So it looks like one's walking through the pearly gates. When I first saw it, when she says, is this going to work? And I thought, no, this is the pearly gates. This is a bit grim. But then I looked at it in terms of the narrative I wanted to give you guys tonight. It does sort of make sense, because can you imagine a pack of howling, baying dogs? I've got 4 beagles, and believe you me, when they get going, it's probably as busy as this slide. But all those dogs are barking, yapping, okay, they're replicated and whatnot. But it's a little bit like there's a lot of noise going on. They're all making different sounds. They're all coming from a different perspective. But what it is, it's a little bit like you sitting at home and there's a dog outside in the road barking. So it's probably a good thing that you don't want to block it out completely, because dogs bark for a reason. There's something strange happening. There's a stranger. There's something untoward. There's a squirrel in the tree, or there's a cat he can't reach or something. But it's a signal. He's sending a signal, but it's through this barking dog. So I think the big trick here is compartmentalize. If you could compartmentalize all those dogs into a little box and say, that one's important, that's not, etc., that would be ideal, but it's very difficult to do that in the true sense. So like a barking dog outside your house, you don't need to engage with it. You don't have to go outside and start engaging with it. You just need to be aware that it is there and it's making a noise, and think about, okay, what could be the reasons for that? So it's, again, a thinking process. It's a trigger to make you start thinking. But there's a lot of this noise, and that's the problem. It would be simple if it was easy as that, and it's not. Okay, so what I'd like to do next is literally go on to, what is the kind of, what are we being hit with every day? So if we hit the next slide, that's what it's all about. We can all identify with one of those bullet points. It's pretty hectic at the moment in terms of what we get assailed with, in terms of what comes through social media, what comes through our news feeds, what comes through TV. You name it, it's there. Okay. I think perhaps the small block on the left-hand side where it says noise, that's probably more like a Wikipedia type of thing. But this is what triggers this noise on the right-hand side, the bullet points. It's sometimes small movements, and sometimes it's very large movements, unexpected, expected, but not to that degree, which basically distort the sort of trend of what should be happening. Okay, suddenly there's an aberration, and what was a nice trajectory suddenly becomes a not so nice trajectory in terms of maybe the pricing of a company, or the direction of a market, or an economy, or interest rates, etc. But all that stuff on the right-hand side, that's in real life. That's what it looks like. I mean, we've all been there. We are there at the moment. It's the financial news cycles pinging about a 1% market drop. You wake up in the morning and, oh my God, what's my pension worth? What is my structured note looking like, etc. It's panic about the central banks dropping by 0.25%. South Africa did that this afternoon. We dropped our repo rates. I think there's no major panic around it because most people are in so much debt in this country. We were rather happy that it's going down another 0.25%. But nevertheless, it happens, and it will impact in certain businesses. Great for people in debt, and certainly companies who are carrying lots of debt. It's the dinner party debates that we go to, or the pubs, or the playing a round of golf, or whatever it might be, which maybe it's doom and gloom. There's a looming crash, or no, there's great opportunities. But effectively, I come back to what I said earlier. The world has changed, and social media. I always used to think that if I lost my wallet, it'd be the worst thing in the world. I think it's my phone now. If I lost my phone, it's the worst thing in the world, because everything is kind of on there. So that thing lives in your hand. It's 24/7. It wakes you up at night, and you play games before you go, and you read your reports at night before you go to sleep. So that thing becomes really it's a heartbeat away. So it becomes very real, and all those things happen. And you sit and you mull and you ponder, and you might phone somebody, you might discuss with somebody, but it becomes this ever evolving sort of bigger loop of I won't say loop of doom, but it's a loop of noise, certainly. So let's have a look at the big noises at the moment, okay? Because there are three major noises besides everything else going on in the world. Let's have a look at the three major noises that sort of I've identified with. If we can go to the next slide. Okay. Oh, I beg your pardon. The next slide is actually quite an interesting one. I started doing this about 3 or 4 years ago, and we've called it Throwback. This is Throwback Thursday because it goes back to January 2025. Often what I do in January is I sit back and I think, okay, what are the lessons that I have learned after 30 years of being in financial markets? What are the lessons I've learned from 2024? Not in terms of what stock was right or what market was right or when the timing was this. And it's more in terms of a trend, in terms of your behaviors, human behaviors. So maybe just chuck them all up one after the other quite quickly, Jill, so we can go through this. The strap line was prepare for volatility, and you'll see basically in terms of the bullet points that come up. It talks about noise in the fourth slide there, in the fourth bullet point. It talks ignore the noise, stay the course, and here we are discussing the noise. But if you read through them, this was a presentation we did in January, and I try and do it every January to see does it still make sense. And I think in July of 2025, these were the lessons that I presented in January. So 6 months later, have these lessons held sway? Have they stayed in the right direction? And we've certainly had a lot of things come to us this year. I think 2025 started off, looking back in the rearview mirror, it's very simple now to have a look. 2025 started off with stock markets booming, the new US administration talking about tax regulation or deregulation, making business easier, tax cuts, great stuff coming. And then, we staggered into March and April into the world of something called tariffs, besides everything else that was going on in the world. And interest rates, inflation, all that good stuff. So it's all in there. But if we look at July and we look a little bit backwards, you have to sometimes change course. But is it absolutely necessary? Remember what I said? Sometimes a lot of this stuff seems very urgent, but it's not urgent in terms of the noise. It's important, but it's not urgent. And sometimes very little of it is urgent. It gets amplified by social media or the press or interested parties. But I think if one comes back to the bottom point, and I was challenged on this by a seriously high net worth client who's not a client of mine, high net worth individual who's not a client of mine. And he says, yeah, but investment people always say slow and steady wins the race. You've got to have these tactical opportunities where you can really accelerate into a position. And that's 100% correct. I still believe, the effect of compounding, of starting early, developing quality, sticking by quality. You've seen it in my weekly reports. You've seen it. I always say, look at a company's earnings, look for quality. Quality will always prevail. And if you have quality early on, you can forget about a lot of this noise, and we'll deal with that shortly. But the third point from the bottom is facts do change dramatically. Sometimes it does need a hard decision to say, I'm drawing a line under this, and I'm going to change my strategy. But you might be alerted by the noise, but the noise should not make you do that. If you are alerted, you have to look for what's called the signal, and we'll get into that shortly. The signals are important in terms of why did you go into that particular opportunity? It might be housing, it might be residential, it might be investments, equities, it might be private equity. It could be anything in terms of the investment world. Okay? Why did you go into that? What homework did one do? What was your narrative? What was your conviction in terms of that? And if your narrative and your conviction created an anchor, then don't worry about all these headwinds that are flying around. Stay the course. There it is. Stay the course. Don't sweat it. Stay with your quality, and you'll come through these storms like everything else. So I'm not going to dwell on that because that's looking backwards. Let's rather look forwards. Okay. So back to what are the big threats, or not threats, what are the big causes of noise at the moment? Okay. It's a pretty dramatic slide. I'd like you to look at the small print. It says August 11, 2022. So why am I showing a slide from 3 years ago, almost 3 years ago to the day? It's because nothing has really changed. The noise was then, and the noise is now. This is not a new feature in our lives. It's probably, if anything, being exaggerated and being amplified. Okay. And this was a particular members-only event, very posh, register now, so many members. It's a live video monitoring 100 CEO strategies. Think about that. 100 CEOs you've got to dissect and disseminate, interpret and digest and spit out and have an idea. That's a lot of information. So that's noise, Who is right, who is wrong? There might be a common theme, there might be a trend line in terms of what they're all saying, but to listen to 100 strategies, that's quite an effort. Banks employ lots of bright, smart people to analyze this stuff, and you on your own, it's very difficult, and there's all this noise floating around. So geopolitical headwinds, 2022, that's when Russia first invaded or had its special military operation, for those politically correct, in Ukraine. It's still ongoing. Subsequently, we've got a lot more going on around the world, in the Far East, the Middle East, and who knows where else next. So these headwinds are a constant challenge to us. And literally, with the new US administration, it's been very difficult to follow. Prior to Donald Trump coming into power, it was quite straightforward. The Democrats were 100% behind, the US administration. The Biden was 100% behind Ukraine. Then it was like, we're not quite sure. Maybe we should, maybe we shouldn't. And they've gone about it in a different way. And that is really weaponizing economic policy. That's essentially what's happened. But it's been a very much of a flip-flop we're not quite sure. It's very mercurial, very pinball kind of style. It changes from 1 minute to the next. It's very different. It's very, very tricky. Moving on to the next major theme is interest rates and the inflation rate in the US, which is still the gearbox and engine of the world. It's been pointed out, and it's quite simple to see that even though China is the second, it's a long way behind. And although Jerome Powell looks very small there, I think those flags are very big. He's not a big man in stature. I've met him, but he's been suffering a lot of insults. A lot of brickbats have been thrown at him by Trump in terms of he's a big problem. Trump should remember he appointed him in his first candidacy. His tenure runs out next year, and he probably won't be reappointed. But he's been very, if I can say, resolute in saying, staying the course. One of those points before, stay the course. He has stayed the course. He says, I'm not going to buckle to political power or political threats of being fired or otherwise. If I don't believe that if I believe my mandate from Congress is going to be impinged on. And his mandate is to keep inflation low and keep jobs high. It's a pretty tricky mandate. But anyway, that's it. And interest rates in the States have been sort of stuck at a position, whereas other countries have lowered. They've got a very robust economy still. Obviously, the big sticking point is that probably if tariffs hadn't come along, interest rates could very well have dropped. All the data points that the Federal Reserve rely on have all pointed in the right direction. The American economy is quite resolute and quite resilient at the moment. So that's a big thing in America in terms of what is happening. The fight, if you want to call it that, between the central administration and the organization that basically is apolitical, that runs the economy. That's basically what they're tasked with, getting the economy right. And Trump wants his way, and he's kind of not getting it at the moment because, as we saw this week, the Federal Reserve met and they said we are not reducing interest rates until we can see the longer-term effects of what these tariffs are going to play out at. You must understand, tariffs, even though 12 o'clock tonight, all these tariffs get so-called cemented, the effects of that aren't going to be felt for maybe another quarter or maybe two in some instances. And as I mentioned in some of my weekly end-of-week sort of wrap-ups, it's difficult because there's all these extensions, there's changing. It's become a negotiation tool, and I think that's a good segue, if I can call it that, into the next slide, Jill, which is really when he first announced in front of the Rose Garden on the White House reciprocal tariffs. He announced to the world, this is it. We are going to war on an economic basis. It's not just economies now. It's a political tool. Okay, it's essentially a political tool. And there's been so much written about it. I think I mentioned on Sunday's wrap, I think there's tariff fatigue now setting into many, even us who are subjected to this noise. We're getting a bit tired of it because it's become a negotiation tool. And if you can read on that chart, if it does come up, significantly that you can read it, most of those on the top have actually been sorted out now. I mean, China has got, I won't say they've been written on the back of a cigarette box, but we haven't got much detail in terms of how it's all going to work. Certainly the US, when it started running out of rare earth minerals, was very quick to talk to China and say, okay, we'll let you have this, that, and the next thing. Not quite the top grade semiconductors, but we'll let you have NVIDIA's Class B shares, Class B units. But we need rare earth for our batteries and all our other things. So there's a lot going on. There is actually, people aren't sitting on their hands. There's a last minute scramble. But, the European Union has now, it's settled down 15%. India, as I mentioned, it's got 25%, and they're being hit with another 10% as a penalty because they're buying Russian liquid petroleum gas, they've discovered. South Africa is sitting at 30%, and because we're in the BRICS group, we do the S acronym in BRICS for South Africa, we're going to get nailed another 10%. So it's been weaponized. That's a great American term. You weaponize a particular instrument, and the administration has weaponized this. So it is tricky, and I think to go back to to refer back to the previous slide, interest rates are probably the prudent opportunity. And I think if anything, it's going to be an interesting. I was on a webinar this morning with an economist who I rate highly, and she said, if anything, it won't be Trump who dictates that interest rates come down. It'll be the economy. It'll be the right time for the right reasons. But I think we do have to, as she admitted, we do have to see what these impacts are going to be to some degree. So yeah, this is something we've lived with since April. I said earlier, just before we started the webinar, I was a little bit late in joining because I was watching some live feeds on Reuters, and I talk about tariff fatigue. This noise of tariff fatigue and how they use it as a negotiating tool. Mexico has been given another 90 days as of this afternoon. So again, it goes on. It's tiring, and it wears one down. And often that leads to the human condition of saying, you know what, I'm not going to do anything. I'm not going to take the opportunity which has been created in volatility to actually do something. And I'm a great believer in, sometimes if your positions are settled and your trajectory is settled, you've got your moat built, you don't need to tweak and fiddle around. Let the course be run. But often, to that high net worth client who mentioned, there are tactical opportunities. These often occur out of volatile situations where there's a mispricing or there's an aberration in terms of the markets, and there's a glaring opportunity to take advantage of that financially. I'm getting a bit of noise, Jill.
Yeah.
Yeah, okay, that's fine. So I always say there is opportunity in volatility, and again, it depends on you. Your risk reward matrix payoff in terms of what you want. But I think a lot of fear in volatility is around markets that come from misunderstanding or not understanding volatility. And I think, as I mentioned, volatility shouldn't be your enemy. It's actually an opportunity if you're a buyer and you're well informed and you've done your research and you've got your narrative. I think that's very important. The bottom line is you get quality stuff on sale. That's how I look at it. And if you believe the long-term value of a business or a company or an opportunity, then the price drops, well, that's a gift. But you've got to be researching. To Jill's point, you've got to be researching what you are looking for. It's not just, well, there's a lucky packet. This sounds good. I'm going to stick it in my portfolio. It needs to be something that moves towards your narrative in terms of what you're looking for as an investor. Okay, so that's kind of the major themes that are causing all this noise at the moment. There's others. But the next slide is quite interesting because I'm not going to dwell on it too long, but it's something that comes out of financial services that is becoming very, very important in family offices and in private banks, where it's not just so much how much money you're making or sometimes losing, it's how does it affect you as a person? How does it affect you when you switch off? You hopefully switch off the news, you switch off the light, you switch off your phone at night, and you lie in bed, and you think about what's happening with your pension, your business, your capital expenditure, your next purchase, your next investment, anything like that. And this was a report that was put out by a company that works specifically with financial services. And it's quite interesting in terms of, I'm really interested in the 22% at the top. They don't give a fig about what's happening, whether they're making money or losing money. I'd love to meet, because everybody I know is quite interested in what they're doing. But these people, they don't face financial worries. Either they are so wealthy or they're misinformed or just head in the sand stuff, because that is not the way to go. But the bulk of people are in those three bars in the middle, the 52%, 40 and 34. They make up the bulk of people. And basically it means that people struggle with and identify with their financial issues. They identify with the noise that's affecting. Maybe they can't make a decision, they do nothing, they sit on their hands, or they jump into something, now they're regretting it. So it's all those sort of things. So it's, I suppose, quietly you can read this. Jill is recording it, you can have a look at it. But it's hopefully it's not to the point where there's financial distress we want to do something really sort of extreme. But it's finances are at the root of health. They can be. So it's just something that this noise does actually impact on you, not just on how many noughts on your balance sheet or no noughts on your balance sheet. So let's maybe have a look at understanding this so-called noise. And I've broken it up into two-ish areas, the noise and the signal. So the noise we've sort of been through to a degree. It's the media rhetoric coming out of the words of economists, people who run countries, influential people, business gurus, financial gurus, etc. Short-term price movements up and down, etc., etc. That's ongoing on a daily basis. It's distraction, and it's dressed up as urgent. Okay, it comes into your life, it pings in on your phone, and you think this is urgent. I need to call somebody, okay, about it. Let's have a discussion. So it's motion without meaning, if that makes sense. It gets things going, but has it really got meaning before you investigate it, interrogate it, before you rush off and make a phone call, etc. So yeah, it's the stuff that makes everything seem important, but really sort of moves the needle when it comes to your financial future. Okay, more importantly, where are the signals? Okay, so to go back to that one of January 25, stay the course. If you've got quality, stick to your narrative. If all else fails, yes, then you may have to change course, but just let the stuff blow over you to some degree. And I have mentioned before, we're wired for the short-term noise. We're wired to react, to get all excited about it. But the signal is what's more important. I think once you can work out what the noise is in your life, and to compartmentalize it like those dogs, where it belongs, then you're going to focus on the signal. So let's get onto the signal. And the signal is really what is important. What is it in real life? Well, we've mentioned noise in real life. What is the signal? And that's really where the real work starts. It's understanding. And let me use an example. I've used their company strengths and weaknesses. Okay, so I'm a big believer in terms of understanding how a company works. Where does it sit in its sector? Where does it sit with its peers? Its competition. Who's its management? What's its track record? Maybe how big it is, how many employees it has. It's sort of granular stuff that a lot of people aren't interested in, but it gives you an idea of the sense and the shape of what the business is. Have a look at its earnings history. Is it sort of erratic? Does it pay money back to its shareholders? Has there been lots of insider selling? This is stuff that a lot of people don't get into, and they don't want to get into. That's why a company like Cashbox will do that work for the actual companies that go into our notes. We do the lifting in that respect. But as an individual, with this noise floating around, companies. Okay, so you're an individual. A company doesn't think like you. It doesn't think like social media. A company thinks more long term. It's got a much higher time horizon than the media, than social media, or the media, and politicians for that matter. If you're a good company, you got your strengths, your weaknesses, your competitive edge or your position, and you know what you're realistically worth. There's always, and if there's going to be a demand for your products, sold by your company, and you've got a strong management, you've got good intellectual property, you've got that competitive edge, you know what you're going to be worth. And I think you can do it for your own business, or your own financial portfolio. How it's constructed, what's good, what's perhaps not working, and not everything works in tandem, not everything works at the same time. And a good investor will say, okay, so I had 10 investments, 2 didn't work, but overall I'm in the right direction. To get 100% zero defect in financial services is just about impossible. But you've got to do the work. I mean, that's why I said that's where the real work lies, is understanding how these businesses tick. Okay, how that sector ticks. Listening to, is there a broader theme? Everybody's going about AI, the AI noise. Is it a bubble? Is there so much money going in there, but will it actually monetize businesses so that they can actually create more, more return for their shareholders? Or is it going to be a blip and we're going to go into something else? And we're getting into the wrong investments. One needs to do the work to create your own narrative. It's a very strong ethic in Europe, where people will do the work. They interrogate what they're going to go into as if they actually own it themselves. So they will know if it's got weaknesses. They'll know if it's carrying debt, or if they know if they had 3 CEOs in five years or so. Those are all perhaps red flags. How do you red flag a company? That's the work that one's got to do. But if you've done that, and you have belief in your narrative, well, then you've kind of bought, if I can use the volatility exercise, you've kind of built yourself a seatbelt in terms of understanding that, yeah, they're going to be bumps. I know they're going to be bumps because we're going to get a new CEO and he's going to go a different direction, but I'm ready for it because I know their corporate identity. I know what they've been through, et cetera, et cetera. So there again, you're reframing that potential volatility for opportunity, and obviously for like, okay, when something happens, I don't need to know about that because I've done my homework, I've built my narrative. So it's quite important. I talk about an anchor there, and a seatbelt, but I think far too often, if you have the dinner party discussion or the round of 18 holes or wherever it might be, a game of paddle or sailing or fishing or whatever it might be, walking in the mountains, or just sitting having a cup of coffee with somebody, and you think, well, this is a good idea, without really looking at it and understanding it. Then when that noise arrives, you panic because you don't understand what you've actually got yourself into. So it's really the 101 of taking baby steps into understanding what you're actually getting into. I had a discussion with a friend of mine whose daughter has started her career and has started her first contribution to a pension fund. And I said to her, I said, in many respects, people who are not self-employed, people who are in employment, working for a boss, not themselves, that pension is probably one of their biggest investments that they make because they forget about it. It gets deducted every month. Thanks for coming. And they tick some boxes when they're 23 or 24 when they sign up to their pension fund. And they hardly ever look at it again in terms of, am I in the right space? Is this fund actually performing? Is this particular unit trust? Is the strategy? Does it accord with where I'm going? They hardly ever look at it. I can speak for myself. When I started off in law, for 7 or 8 years, I was a practitioner. I didn't look at those things. I went exactly down that same route. Only when I got into financial sales, I thought, hang on, let me go back and look at this pension, because I wasn't saving anywhere else. And let me see if this thing's working. And it wasn't. So I thought, okay, I'm allowed to make changes once a year or whatever it was. Let me start doing it. So interrogating, looking for the signals, understanding what made sense, asking other people, does this make sense? Getting the advice, or being self-led and being self-educated. So, there's a lot we could go on. It starts getting into the sort of the personal, 101 training side of things. But I think if we move to, the last wrapping it up, if I can call it that, because I'm just, watching the time, there might very well be questions. So wrapping it up is, I mentioned, it looks like it's urgent, but it's actually not urgent. Motion without meaning, moving the needle, all these type of things. And I think Jill made a very important change this afternoon. She says, I'm changing your last slide, which is focus on the signal about building wealth. Don't obsess over every market move. It wasn't a play on words. Mine was simply don't watch the markets all the time. If you're not in financial services and you don't have to, then why? Because that 1% or 0.5% or this, that, and the next thing you start, okay, I'm going to get sucked into, and it almost becomes an addiction where you look at it every day, or you start looking at it every 5 minutes on your phone. The phone is right there. You can click on stocks and off you go, portfolios, see what's happening. And it detracts from your energy. It detracts from what you're trying to do, maybe in your day job. But again, compartmentalize it and give it its space, allocate it its importance in terms of what it's going to do. Again, stay your course, don't second guess it. So I think to a large degree, what Cashbox has tried to do in terms of the product range that we do is that, as I mentioned, we do the heavy lifting with the structures and the investment banks and trying to find the right trend, trying to allocate. Chad always says, we do this because we need to make sense that is it going to be a win-win for all concerned? In other words, we don't want to get into, if I can call it, bed with a banking product that's totally skewed towards the bank, and we're never going to get anything out of it. We need to have a fair deal. And we interrogate, and we do get approached for a number of products. We say, no, we're not interested in that. We're going to build our own. And that's really the way that Cashbox is certainly moving more and more into building its own products. We've done that for so long now. But we know then that we have given it the right type of resource to interrogate why we are doing this. Is the theme right? Does it resonate with the current circumstances of the geopolitics or the economics? Is it going to be thematically resonant and relevant in 2 years' time or 3 years' time when the product is coming maybe to the end of its life cycle? Have we got enough protection built in? Is the protection there? So we've tried to take a little bit, in the previous slide, we say, take out the guesswork. We're trying to take out as much guesswork, but it's still incumbent on all self-led investors, to analyze, as Jill said, go off, do the research, etc. And obviously there is this noise around it. And I often say, talk to the people who are producing the product. And then with these sort of bigger pictures, these broader brushstrokes of macroeconomics and what's happening in the world, ask them, settle your concerns.